Who wants to make $1.5 million? Please raise your hands. I want to explain to you guys how I do my analysis. First step, what is this property worth fully stabilized? That's what you need to figure out. So easy to make money in commercial real estate. You guys have no idea. I need a deal. I got a deal under contract. Boom, for $6.5 million. So I'll assume that they're telling us the truth in the beginning, but then I'll unleash Nathan on them in due diligence and he'll tear them apart. Alexandra, go. Boom, she sends an offer. Now here's where the magic happens. And I want to show you guys how easy it is to find deals and how to make money in commercial real estate. I look in like the Midwest, right? Michigan, Indiana. So let's do this. It's this territory, right? So this is actually top properties are our properties. Crazy. All right, so now you go to filters, okay? And in the filters, let's say we go for retail and keyword, value add. What is this company called? Value Add Network. We'll look for value add deals. Boom. If the brokers communicate value add, they're not always honest. Sometimes they'll say value add, but it's actually value add subtract. But your goal is to identify it. So what I'm gonna go is teach you guys how we do these things and how we find these opportunities. By the way, you can do it for lease also. For lease, the strategy is a little different. You look for anything that's 50% occupied and you call those brokers and say, look, I have a buyer, would you sell? And depending on where they are, it might work. Look, 193 opportunities. Now, I don't want to do single tenants. I want to do multi-tenants properties and retail. So Luck, Wisconsin, this is interesting. 8.5 cap, significant pro forma returns. Pro forma means future. And so let's look at it. So it's 15,000 square feet for 2.1 million. I think this was brought to us. First thing that goes to my mind, see the fields? You don't want to buy a retail when it's surrounded by fields because you need density. And so right away, I will say, not my kind of deal, unless I buy it for a really deep discount, I probably wouldn't want to do it. The other thing I always look at is incomes. You see household incomes? And look at the population. Population is dropping, incomes are going up, 74,000. So it qualifies by incomes. It doesn't qualify by population growth. And with this situation, with this being surrounded by fields, we are not going to go after that deal. So this is another property. I actually like Appleton. So this right here is a property that has a potential. Now, look at this, 77% occupied. Anything that's 80% occupied or less, if you can pick it up at about 8 cap, I think it's a deal. Now look at this, it's 7.96 cap. All right, so first thing I look at is household incomes. I want to be between 60 to 80,000. Ideally, we want to be above 80,000, but this is good. This is a 3-mile radius, by the way. That's for a 1-mile radius, 74, 3-mile radius, actually, it's abutting a higher income area, which is nice, and a 5-mile radius, okay, 83,000. 176,000 people. I don't want to do business. This is me personally, by the way. Some of the guys live in the smaller towns. You can create your own criteria. For me, 100,000 people in 5-mile radius is very important. I want to be above 80,000 square feet, which we hit on all the cylinders here. Now, I like the national tenants, and here, so I will show you guys now, first thing you will do is look at the OM. All right, and this is what the OM looks like. Nice, pretty. For those of you who are friends with Claude, 20 bucks an hour buys you that friendship, you can actually upload this, ask all the relevant questions, and boom, it will give you all the answers. But here, you got all these vacancies, right? The biggest risks you want to identify is whether Petco and Guitar Center has a long-term lease, and if they have a short-term lease, you got to be prepared for them to bounce, and if they bounce, you have basically a drop in the NOI. But if they have a longer-term lease, notwithstanding anybody leaving, I'm all over this thing at $7 million because at 8 cap, an in-place income, and 6% interest rate, you can deliver cash flow to investors day one on this property. Everything else is upside, okay? It's got an older portion and a newer portion. These are the companies. All of these are national companies, which really we like. Petco, Guitar Center. And here's the rent roll. So Petco expires in 2033. It's got 3 renewal options for 5 years, $16 triple net rent. and it reloads at 18. So it goes 18, 19, and 19. You see that? Vagabond Shoes, that's a local credit tenant, 31. Nice, $12, triple net. Beautiful. Guitar Center, expires at 32. I'm liking it more and more and more. What's going on here? Vacancies, 4,000, 1,800, 2,100, 875. With us and having our system, I'm pretty positive that once we white shell everything, clean it up, we can lease those units in short order, and we can basically get, I look at the weighted average rents here, right? You got 13, you got 16, 12, 19, 12, so 13. So I'll take a weighted average rents, and I'll project that I will assume that I'll rent the rest of the building at that number. Now, the beautiful thing about retail and industrial, if you have triple net rents, and as long as you pass all of the deals into triple nets, you don't really have to necessarily worry about expenses because they're paid by the tenants. Having said that, you always want to try to help your tenants, fight the taxes and stuff, make sure you run a tight ship. But expenses here are about, total cam is $1 a foot, which is cheap. So they'll give you all these numbers. You got to verify it with tax return. So I'll assume that they're telling us the truth in the beginning, but then I'll unleash Nathan on them in due diligence, and he'll tear them apart. So here's the rents, and net operating income is 557. So now here's most of the time what happens is they'll give you this. You look at the tax return, and it's like 350,000. And you're like, well, wait a minute. You said 557, it's 350, and then but they ask you 7 million, and you caught them in the lie. They're like, all right, fine, you win 5.8 million. So it's not that we are negotiating, we just understand how the math works, okay? And then here's the stabilized pro forma assumptions. You gotta read this, understand this, but once you understand how this whole thing works, it will be easy for you to systematically work with this, all right? And this is a stabilized cash flow that they're projecting. And they're projecting that your net operating income is going to be 680 in 27, 807 in 28. Now here's where the magic happens, okay? I want to explain to you guys how I do my analysis. And so you need to be able to do that analysis yourself first before you trust those guys, all right? So 47,000 square foot property, and the asking price is 7 million, right? In place NOI is, what was it, 557? So easy to make money in commercial real estate, you guys have no idea. Like on this one, like Alexandra, go! Boom, she sends an offer. Now, this type of property, look at this, national tenants and stuff, I would say 7 cap, 8 cap, once it's fully stabilized with triple net rents works. How much vacancy do we have here? Number one thing is for you to recognize the stabilized value. That's what we're gonna talk about, okay? So vacancy, square feet total, 10,000. 666. All right, where's my Chinese? Oh, Chinese. That's Christians right there. By the way, the address is 6666. All right, it's you can make a lot of money. I look at all the rents, and by the way, you can always ask Claude. Hey, Claude, what are the weighted average rents in that market for this type of property? The other thing I want to look at is traffic counts, because if you have 18,000 cars going by or more, then national tenants will come, which most likely it's probably already there. Now you found the property. First step, what is this property worth fully stabilized? That's what you need to figure out, okay? So what you do is you take the vacancy and you multiply it by the weighted average rents that the building carries today. Now you want to be careful, because if the landlord has been running it low and the rents are low, you got to also look at the comps. But I'm going to assume that it's $13 to $14 triple net. Does it make any sense? Let's do $14 triple net. So if I multiply 10,666 by 14,000, what's that math? 149,324. In order for me to understand if that's a good deal for me, I have a certain ARV. I want 30% margin. I add 557 with 149, 706, 689. Now we have a stable property. You did everything great. Everybody's paying. All the tenants are happy because you're a value add company. 18 months later, I've seen this movie so many times, by the way. You go to a bank, and by the way, to buy this building, we're probably gonna end up buying at 6.5, 6.2, something like that. We're probably gonna spend 500,000-600,000, but let's assume we bought it for 7 million, okay? On average, for each space, this is a newer building, all these spaces require some work. So I say at 20, 30 bucks a foot, we white shell it, we clean it up, and then what we do is, if a tenant wants some kind of build out, like I'm putting a bakery right now in a shopping center, I'm gonna put $150,000 in TI. When I put $150,000, I actually increase the rents by the amount of money I gave him, and the exchange of dollars is for every dollar that you invest in the TIs, you get $2.50 in value in the building, which is really, really good deal. Like, and the tenant, by the way, is spending $150,000. But in this case, let's assume that we're gonna spend $30 a foot. So TI and lease up cost is $300,000. If it's higher and you advertise, it doesn't matter. It basically becomes a wash because your value is gonna go up, your NOI goes up. All right, so now your basis is maybe 7.3. Here's the math for you guys. Let's add 557,000 with $149,000. That's going to be a new NOI. Oh no, we have it already. Divide that by 8%. So new value is 8.8, and appraisal will give you that value. So 8.8 million, 8.8 minus 7.3 profit if we sold it. Who wants to make $1.5 million? Please raise your hands. All right. So the complexity here is, where do you get debt? The complexity here is, where do you get capital, equity capital? The complexity here is, how do you do everything, right? So now, just so you know, the magic of our whole business is that we're not gonna buy it for 7. We're gonna probably buy it for 6, right? And the magic here is, we're not gonna do it at $14 because we're a value add company. We're gonna go in and we'll say, hey, red carpet treatment. What do you need? And the guy's like, I want to put a bakery. All right, well, here's the thing. We're doing it at $14. We're going to spend $100,000 in your space. Your rent is $19. And they're happy to do it. Boom. So this is a worst case scenario. I have a sense that on this building, we're going to make $2.5 million. Let's talk about cash flow. This is another exercise for you guys. Cash flow calculation. 7.3 million is the total basis. Multiplied by 75%, please. So debt load, 5.475. I'll just say 5.5. Let's do 6%, 25-year AM, $5.5 million, 6%, 25-year amortization. What is my payment? Okay, so tell me monthly first, and then we'll multiply by 12. $37,000 mortgage payment, you guys. Multiplied by 12, total debt service, $440,000. If my new NOI, stabilized NOI, is $706,000, and I take $706,000 minus $440,000, what's my cash flow? $266,000. And just by the way, guys, worst case scenario. Everybody, please attention. Lauren, please attention. This is for you. You chase that deal, right? And then you say, guys, yesterday I'm walking around and people are like, I need a deal, I need a deal. I got a deal under contract. Boom. For $6.5 million. You ask Claude to give you a very nice presentation, and you need to put 25% down on the $7 million. That is about 1.5 million, $2 million, say $2 million raise. And there's people here salivating to do deals, like Brian over there, like Gerard or Dennis. Like, dude, what? 200 grand a pop, 10 guys, right? Put the whole thing together, and you go buy the property for $6.5 million. Obviously, you're honest. Obviously, you're very, very responsible. And they're like, man, I can't sign on debt. I say, hey, by the way, who can co-sign on the key principle is called? Who can sign on debt here? And Alexander's like, I can sign on debt. What do you? Let's split it. So you split it with her. So you get 25-25. Everybody gets money, and then you guys do your thing. The beautiful thing about this one, this is not an empty grocery store. There's no risk. You got the major anchors that are going to be here from 31 to 33. To 2031, 33. You buy it, you fix it, you have fun with it, you fly on a plane to meet tenants and stuff. Appleton is a beautiful town, I love it. If I wasn't so busy, I'd probably write it up right now. Cole, let's go.
We made an offer on this.
Oh shit, you did? How much did you offer?
We offered 6.9.
Oh, somebody bought it, huh?
Yeah.
So here's what I'm telling you guys. When a good deal shows up online, multiple offer situation, unless we bought the deal. Hey, Mr. Broker, I'd love to work with you. Can you please represent this and the other? We would have gotten it. But we have so much going on, we'll let this deal go. But this is, and by the way, 14 is probably low because it's probably 16 bucks. All these small bays, they rent for a higher number. All right, well, let's do this. Let's forget about this stupid deal. It's gone anyway. You can see deals like this every single day, every single week they show up. And number one thing you do is do a quick analysis. It took me, what, 10 minutes to do it? With Claude, you can do it in 5 minutes. And what you do is you call the broker. And of course, you guys are superstar value-add members, and you got yourself a website, you got yourself a business card if you want to meet them in person. And you say, hey, my name is Alex Shahanov. I'm with Columbia Creek Finance Company, like whatever. I'd like to make an offer. Guess what he does right away on the phone? He checks out, okay, is this real? This guy's real, or is he like not real? He verifies that this is a legit guy. All right, I'll meet with you, show you the property. Boom, walk through. If there's a multiple offer situation, you offer the broker, like I did Brian, a job, or you say, let's work together, or whatever, you keep the commission. You gotta basically buy it. Finding the deal is the biggest value add. Second biggest value add is finding tenants. Finding tenants on that property is so easy that anybody can do it. To the extent that you're a member of a community where you build relationships, right? If you know people here and you're first in the to present that deal, because what happens here is like somebody says, oh, I have a deal, and then they don't do anything about it, and then a month later somebody else brings the deal and we close on it. And well, dude, we gotta run with it, right? So that's why we have to always value the relationships. But the other thing is, like, if you have Seattle people, right, and we found a deal in Seattle, just partner, work on building a relationship, invest in a relationship, because there'll be more deals. And here's one thing I can tell you from my personal experience: you will never run out of deals. As much as you think you'll run out of deals, there's always going to be properties like this. And one property like this can completely change your life. And it changed like Brian, Alexandra, Sean, Rustam, Julie, Marshall, and Daniel. I mean, this is what we do, right? And we partner on these deals. Now, I'm a beneficiary of this. Corey and I are doing the deal. Hopefully, we're going to do a deal with Julia. But you see how, like, once you get it, it's so simple. But yet you are so intimidated by the size that you don't believe it's possible for you, so you don't even go. Somebody else is doing it. Now, if you're in this community and you're sitting on those coaching calls and you're listening and you're seeing how other people do it, you're like, all right, I'll just create my state searches and I'm gonna do it. And this is just one way. Finding properties online is just one way. There's 20 other ways to find deals in real estate. And I think anyone who applies themselves, it's just beautiful to watch how they evolve and become super successful and wealthy. And then other people, they don't do anything about it. And I'm like, what are you doing? You're wasting your time, wasting my time. Do something about it, right? And then I hurt their feelings. They need to be Dalai Lama about it.